Coming to you live from downtown Detroit, this is Ben Zanger's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to this Thursday, March 16th edition of Ben Zinger's Pre-Market Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. On today's show, a lot of news this morning. Unlike the first few days of this week, it seemed like we got Tesla raising some capital, we got Starboard getting out of Macy's, GoPro got a bounce, Snapchat got a bounce, and maybe we'll talk some Fed. We'll see if we feel like it. Two guests for you today. At first is 8:15. That's Dan Zanger. He's the founder of ChartPattern.com, and then at 8:35 we're going to be joined by Andre Cherney. He's the CEO of Aspiration. It is a new bank that he started. He's going to tell us all about why he started his bank and what makes Aspiration different from your typical bank. Joel, how are we doing in the S&Ps right now?
Oh, very well here. Trading up 475, 25.85 and a quarter. Just got a little bit below the close. 23.88.75. That's your target on the upside. Couple the all-time high close 23.90. The all-time high basis, the June contract 23.98. Gold and silver getting nice bounces off their psychological levels. Gold up $26, silver up nearly 60 cents, and crude back over 49 here at 49 and a quarter, up 39 cents here. A lot of green on the screen, Dennis. What do you think of this buy everything market?
That's what it is. Buy everything yesterday. Everything except the financials. The financials got hit a little bit on that. Yeah, we were wondering, if there was priced in or not. Obviously, maybe a lot of it was priced in. They really wanted, they were saying they're only going to go up a couple times. I guess it wasn't good enough there in the commentary. But, man, the market blasted off, and gold blasted off, and the bonds blasted off, the stocks blasted off. It was buying everything, Joel, except the banks.
What do you think about that with the Bank of America here? You never got a shot there at that 25.80 level.
I know, I wanted the pop and the drop. That's what I was hoping for. And we never got the pop. We just got a little bit of a drop. And it wasn't even a bad drop. I mean, still, even though we're saying, buy everything, or, the banks got hit, but they really didn't get hit hard.
And just keep an eye on those highs of the moves. I mean, I guess they wanted 3-4 hikes this year in order to satisfy the financials.
Yeah, so obviously, a lot of this has been priced in here, but, am I getting bearish the financials here? It's hard to get bearish anything. I'm going to give you the classic case of why this market is so tough to short. Last night, Tesla comes out with a secondary offering, and this is, the poster child. Tesla is a poster child for this market right now, an irrational exuberance a little bit, in Tesla, because Tesla comes out secondary offering, going to do, what was it, 250 million, Spencer, raise, and plus a bond offering as well?
Yes, that's correct.
So, dilution. Classic textbook definition of bad for shareholders dilution. Oh, Musk is going to buy 10% of the
I'm sorry.
offering.
It's $1.15 billion capital raise, $250 million in stock.
Okay, so a huge capital raise, but $250 million in stock. So classic dilution. Classic bad for a stock, and they hit it on that. But then it comes up the next headline, Musk is buying 25 million of it. So Musk is going to buy 10% of the capital raise. Everything is fantastic then. That is awesome news. Okay, so this isn't bad news. Forget about the dilution. If Musk is going to buy 10% of the dilution, that's good news. And the stock rallies 13 points. So the stock's trading up here now, 7. So I look at my screen, and I just think, what nonsense, but I'm not going to fight it. So, here it is, textbook definition of dilution bad for a stock, even though Musk bought some. And the market finds a reason to buy it again. And then the reason is that Musk is going to buy 25 million of it. But, really, let's put this in perspective. Is this really good for Tesla? Again, I guess they need the money. I guess, for whatever reason, maybe it's better, obviously, to sell high than sell low. So maybe give them props there. But I just think, this market just wants to find a reason to buy anything. And there you go. Tesla, again, the poster child for this market.
64.70, that represents your pre-market high. Still trading in the 22.62 handle. Got a number. I'll give you one number I like really here on the upside for Tesla. That's 22.64.66. Coincides with the pre-market high of 64.70. I'll go to the daily chart to illustrate this. There's your gap from earnings. So see if you can fill that gap. 265, huge level there in Tesla.
So difficult to short anything in this market, and you just got to go with the flow. I mean, as a trader here, instead of fighting the tape, you kind of just got to go with that. Check out the breakout in Apple yesterday. Everybody wants to get bearish up here. Apple at 140. It's still one of the biggest positions in my investment portfolio. I'm still sticking with it here. This is a breakout, classic breakout here. 140.27 the high. Now you're looking at 140.46 the close, and now we're up here again. So nice $2 rally here yesterday for Apple on the backs of the Fed. And we're in breakout mode again, Joel.
And I think we got some positive comments out of Goldman. We got a price hike at RBC. You had, people short on this thing too, right? Around the whole number of 140. Consolidation. You had that one crazy spike to 137.10 or 30 3-4 days ago, but that was just an aberration here. Dennis, I heard you talking on the pre-market show. You said 150, and you know what? It said 141. I'm not even tempted to give you $9 going the other way. I'm just no way. You can't fight the
Joel's
game.
getting bullish here too. I think I could see 150. Yeah, we know I don't talk my book a lot on the show or anything. But I've had this one for a long time in there, so I'm sticking with it. I've stuck with it for 40 points. I think it's starting to get. I bought it on a valuation call. I bought it. Same reason Warren Buffett bought it. I try to use the same, investment approach in my portfolio. There, I like companies that are basically pretty cheap relative to maybe their peers, relative to what the market's multiple is. Apple, is a cash cow. It's you could call it a one-trick pony here right now. I still think there's more tricks in the bag, though. I think they're going to come out with more stuff to give us some growth here eventually. But that one trick is awesome. The iPhone is just a huge moneymaker for them. And just reading that tweet from Yusko the other day saying that Apple made more money last quarter than Amazon has in the last 20 years just shows you this thing is a powerhouse still. So hard to get bearish when the thing's breaking out to new highs.
Yep, use your half and whole numbers if you're looking, or if you have a target, based on your technical analysis or based on your risk reward, take it. But clear skies ahead in Apple.
Let's go to the earnings parade here. The big one that I got egg on my face on this one from last night, Oracle. I tried to short at 44. I tried to short at 45. I finally gave up, and I'm glad I gave up because this thing's now 45.70. So I did okay. On the initial report, I was looking for the pop and the drop because it seems like Oracle always does that. Not the case last night, though. So on the initial report, I got short just before the big 44 handle. I actually got covered, and I think I made 40 or 50 cents on the first one. That was right. I was in the trade for less than a minute. And then it blew through 44, and I actually didn't get caught the second time through, which is good. But I got caught trying to short it. I was hanging out in the 44.5 area. It was a little bit early there. Conference call came out is what dinged me. So, I was playing it a little bit, and the conference call came out, and then they really started rallying it. It was probably around 5 o'clock. And then the stock just blasted off in orbit, took out 45, which I thought 45 would be a brick wall. It was not. And then, continue to go higher here. So overall, fading Oracle on the strong earnings wasn't a good idea. So I lost a little bit of my trade in this last night, but that's okay. You live and you learn, and you trade and you learn. 45.70 is where it's trading now in the pre-market. Huge volume already too. 468,000 shares of trade. I'll go with the next whole number, $46. So I'm sticking with the whole numbers in Oracle. It has worked for me in the past. I might try to fade it up there, but this market is tough to fade anything, at least on the short side.
One number. I'll give you two numbers here, Dennis. I know you don't like more than two numbers. 46.17, that is your pre-market high. That's being protected right now, the 50 cents off that level. The other level after that, 46.71, that represents your all-time high from December of 2014. So there's a couple targets if you're long Oracle going into the regular session.
Couple other earning stocks there to talk about. Going the opposite way, or actually not going the opposite way. I just assumed because it was a retailer. Williams-Sonoma WSM here is rallying this morning. Woo. It's up $1 here in the pre-market. Yeah, even a retailer going up. Look at this market. Well, I guess you can go to guess after that, and guess is not going up. But so not every retailer is going to be good here this morning. But WSM 49.60 trading in the pre-market. Spencer, how did WSM do on the report?
Well, I'm disappointed you never asked me about the Oracle numbers, but that's okay.
Oh,
no, it's okay. It's okay.
Oh.
WSM, it's okay.
I feel so bad. Sorry, Spencer.
I know. WSM Q1 EPS 40. They see Q1 EPS 45 cents to 50 cents. That's in line with the 54-cent estimate. They see sales at 1.085 to 1.12 billion dollars. That's on the low end of the estimate. And the fiscal year EPS is coming in line. Fiscal year sales coming in a little lower than the estimate there. And they're also raising their dividend from 37 cents a share to 39 cents a share.
Big 2-cent bump. Woo woo. Joel, technicals.
Our favorite store here, Williams-Sonoma.
do you go into Williams-Sonoma?
You
ever?
can't buy any. That place is so expensive. I think
so expensive.
Oh.
Same thing. I walked in there once with Laura, and I was like, I looked at the first couple things. I was like, I got to get my wife out of here. Because it's just way too expensive to store everything in here. Totally against how I would buy stuff. So, this is definitely not me and Joel. We're a little bit on the cheaper side. That store is just not Big Lots.
I did get Lisa an anniversary present there once. I think.
Well, that had to be a big anniversary. Was that like the silver anniversary?
No, it was like like anniversaries. They have like different. Like there's obviously the silver and the gold or whatever, but every anniversary has a different association with it. And I think it was.
There's a Williams-Sonoma anniversary?
No.
I laughed at that. That was good.
You're following me now. You're following me. Like the
okay,
paper.
We're listening.
So, anyways,
I'll stop interrupting.
It was porcelain or it was glass. It was something glass or something. And I was looking around the mall, and like the only place that had like glass things to buy was Williams-Sonoma. So I think I paid up on that. But
could have bought a new windshield or something.
I don't know. 52 pre-market, huge range, 52 to 46.74. I don't know. Tell you about this one. Trading up $1.48 to 49.60. I guess 50, psychological number, 50.08. That was your high on March 6th, and then 50.61. Coming back on the downside, if you're short to saying you'd probably like to see the close at 48.12.
Okay, retailer disaster of the day, because we have to get one of those every day, is Guess. It's trading down 13% here in the pre-market. GES reported there after the bell, and how did they do, Spencer?
Q4 adjusted EPS 41 cents versus 44 cents. Sales of 679.27 million versus 685 million. So they missed on both those numbers. They see their Q1 EPS at a 33 cent to 30 cent loss. 16 cent loss is the estimate, so they missed that number by a lot. They see their fiscal year 18 EPS at 28 cents to 40 cents. Again, that's for the whole fiscal year.
The apparel retailers have to be the only sector, or at least one of the only sectors, where shorts seem to just work. This market is the toughest market to short. Everything seems to go up, except for anybody that sells clothes. And Guess here, poster child again, teeny bopper stores or whatever. I don't know who shops there at the Guess. The big question mark, right? Isn't that their logo?
Yeah, I guess you didn't need a new pair of jeans, Dennis, so it's a bad quarter.
No, I wasn't shopping at Guess. Sorry, Guess, I didn't help you out last quarter.
Now, is it, I was just going to say, it's a bidder offered at 1060. It must be offered. You just got a 1050 print. That eclipses the low of the move of, 1155. 10? If you're short, you want a psychological level. Let's see. 970, March 2009 low.
Yeah, you start looking here, and I think the same thing. $10, is probably maybe the bounce level. The only thing I've gone for is everybody is bearish, and you are in the most awesome market where they just find reasons to buy things. But retailers, like I said, in clothing, apparel, makers have not fit that bill. Dollar General, though, there's your retailer that actually sells cheap stuff, and the market seems to like that. But today, Dollar General is just kind of trading flat. Did we get the numbers for DG yet, Spencer?
We did. $1.49 versus $1.41, $6 billion in sales versus $5.95 billion in sales. Comps up 1%. So the Q4 looks good. As far as fiscal year, that is looking, EPS at least is looking lower than the estimate.
Not great news. Not getting killed here, though. It's only down a nickel here in the pre-market. It's a retailer, but I don't think these dollar stores fit the same bill as a lot of the other traditional retailers that are getting killed. Some of these have actually held up fairly well. Just hanging out here, Joel. 72.80.
What do you mean it's just hanging out, Dennis? It went to 77.11.
No, come on. Did it?
Look on the screen.
Really?
Yeah.
Really?
Yeah.
I have to go look at those prints. 77.11? It's trading 90,000 shares, so I believe you. It's on the tape. Wow, man. And that's a huge level up there, too. Look at all that resistance up at 78. Who's buying that thing up at 77.11, man?
I don't know, Dennis, but yeah, go look at the print, see if any volume traded on that. Spencer, we got an 8:15.
Yep, 8:15 guest. Time to go grab Dan Zanger. He's a momentum trader, the founder of ChartPattern.com, and we'll be right back with Mr. Zanger.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Alcon, along with Dennis Dick and Spencer Israel. And we have a special guest on the line, Dan Zanger, momentum trader and founder of ChatPattern.com. Dan, how you doing this morning?
Very well, Joel. Thank you. How are you?
Doing well.
We're doing good here, Dan. Dan, Dennis Dick here. I just wanted to ask you, because we've had you on the show a couple of times, and we've never asked you the story, because you are the world record swing trader. You turned $10,000 into $18 million, and that was over a short period of time, I remember, too, wasn't it?
18 months.
In 18 months, how? Okay, so we have to ask this question. And I don't even care if you take the whole segment to answer this question, because this is got to be a good story. How do you turn $10,000 into $18 million in 18 months?
Well, you have to be prepared for swing trading, number one, understand how it works. You've got to do a lot of homework in the nighttime and see which stocks are ready to move the next day, and then obviously have real-time quote screen and understand volume and which groups are strong, which stocks are set to move. And, of course, back in the days, we had a good ticker tape going. CNBC had a nice ticker tape. Today's ticker tape is not a real ticker tape. But you'd see stocks explode pre-market across the screen. You knew which ones were the market was going to run that day, and you had to run with them. It's like running with the bulls in Pamplona there, you know. So, you know, if they go, you go. So, you know, you had to just jump on them.
What years was this?
This was started in February of 1998 when Bill Clinton signed the no tax law for internet sales across state borders. So this this lifted internet companies, like Yahoo and Amazon, just about doubled overnight. Just on that signing, that meant they weren't responsible for collecting a tax or sending products to 50 different states. The software at the time just wasn't developed. So at any rate, this was the kickoff to the internet bubble in February of 1998. And, that's when things really took off. I was surprised by the whole move. I was on the sidelines, actually, and I had basically gone broke in the market break of October 1997. I had to sell my Porsche, my little old Carrera, and raised $11,000. I owed my broker $225 from that fiasco, that market break. Left me with $10,775, and then the market took off. I think I did my first trade like in March after everything took off, and that was Inc. to me. And that was a
what
quick
stock? Do you remember
run
the stock? Do you remember what stock it was? The first one that got you back going the right way?
Inc. to me. INKT.
Okay.
Inc. to me, which was since bought by Yahoo many years later. Then DoubleClick. The list is long. Believe me, these things were doubling within 2-3 days. So you'd buy them at $45. In 2 days, they'd be $95. And this went on through the summertime, and then And then in the summertime, typically back then, the market would typically get quite weak. Everybody would head to the Hamptons. It wasn't so much electronic, round-the-clock trading, shall we speak, global connection. And, August would typically sell off. And so I was shorting Amazon and doubled my money on shorting Amazon in the break in August. And everything bottomed in September. And then come October, around October 6th or 7th, the market just exploded to the upside. Yahoo, CMGI, so many internet stocks, they just took right off. The market just especially October through April is the market's strongest time of the year. So things are just going. I'm just buying and selling left and right. I'm on 100% margin all the time, no options. And, stocks would run, 100 points in 4 or 5 days, just one right after the next.
So, Dan, during this time, are you watching, like, the fundamental drivers of the market? Like, how do you know, like, how confident are you that the rally will keep going during
There was no fundamentals. How confident was I? Well, they just kept going. So, people say stop. I made my first $1 million. I had some guy come over and say, you need to quit and retire right now. I'm like, but the market's still going. So, as long as I'm looking at the charts, the groups, the stocks are an internet stock. They're in a strong group, the internet group. And as long as they were, had a new product, sometimes they had a new website. A stock would triple just because they upgraded their website. It was the nuttiest time you could ever imagine. And I'm just constantly rolling cash into all these stocks that would break and run. They'd break falling wedges. They would break channels. They would break cup and handles. Had key reversals off the bottom. It didn't matter. And run them up for 4 or 5 days. I rarely held a stock for more than 5 days, but there were occasional times where I might go 3 to 5 weeks. But that was unusual.
Dan, can you compare, because, there's not a lot of traders that have been out here as long as you, and those who obviously, participated as much as you did during the tech bubble here. Can you compare the current market to, the tech bubble back then? Because you said, there was no fundamentals. And you have a lot of people that come out here and say, oh, we're in this big bubble here and it's going to burst here. But, when I look back in 1999, that was a bubble. And you look at it here.
No, that was a bubble. This is no bubble. The S&P is expensive. Getting to be as expensive as it was back then, but the movement in stocks is nowhere near comparative to where it was back then. Stocks were trading at PEs of 4,000 and 5,000 back then. They had a penny earnings, and they're trading at $100. And next quarter they may have 2 cents a share in earnings, and stock would go up another $100, $200 just because it had 2 cents a share in earnings, and it beat estimates by a penny. So there's zero comparison to what was going on then compared to now. Now the market is just melting up continuously. Back then it raced up. You got to remember, Y2K came around in January of 2000. Greenspan had terrorized everybody that the financial markets could collapse, that no computers could read a zero. They were only programmed to go up to 1999. So everybody was short. Greenspan's giving away money to make sure the institutions don't collapse should they run into problems. So you had this wild run. The NASDAQ went from 3,000 to 5132 in 3 months. So a near double in 3 months. Can you imagine the NASDAQ going from 5,000 to 9,000 now in 3 months?
No.
That's the difference.
All right, so I want to ask you now, Dan, about a couple of stocks that are on your radar. I know you've been watching Momo for a while. I see you tweeting about Shop frequently. What are some stocks that are on your radar right now?
Do like Shop, I like Momo, Baba. NVIDIA had a massive run. It's working off the parabolic curve that it broke. And could take maybe another set of earnings before it really gets going again. It certainly needs to break into new highs. Amazon is at new highs going horizontal. That's ready to go. Google is at new highs ready to go, and they're negotiating with China to re-enter the Chinese market. I think that would be a sensational move for Google. So I'm watching that one quite closely. Shop, INCY, Insight Pharmaceuticals, potential buyout bid from Gilead on the horizon. Celgene, Amgen. LABU is my favorite biotech ETF. I highlighted that at 32 about 4 weeks ago. It's at 54 now. OLED, highlighted that one at 61 2 months ago. It's at 86 now. Those are the main ones in Chinese stocks. Is Momo certainly got earnings up 650%, revenues up 580% or so. They are just crushing the market over there. So with their new products. So I'm definitely all over that one. We bought that one at 28. It's at 34 now a week later. So that one looks good. Those are basically on my radar, in addition to maybe another 20 or 30 stocks at this point.
I just wanted to ask you, you mentioned the LABU. I've been eyeballing this IBB at 300. It looks like we're breaking out above it. Could you give us any technical setups here? I mean, is that a bona fide breakout to you? It's been in a long-term bear market. Could you share your technicals on the IBB with us?
Well, I mean, it's the same as LABU. It's breaking out. Looks like 1, 2. It's a triple top breakout, so that's super positive. Going back to August, large cup and handle, and you know, all the biotech stocks are lifting. So it's basically looking and doing the same as LABU, except LABU is $54 and this one's $300. So. You know, I continually tout the LABU as a result, but they're both doing the same, looking the same. So BTK is the main index before all these other ones. It's already way ahead of those ETFs, so it's already into new highs considerably. A little flaggish, like ready to extend higher here. So I think. All these biotech stocks are looking quite good here. There's not much they can do when you have a unique drug to control prices, at least not in the U.S., you know, especially when you're paying off your congressman not to do anything. So, you know, it's a real
Dan,
song and dance routine, speaking out of, you know, your mouth while your hand is out, so it's you know, we're never going to get anywhere with that rule.
Dan, before we let you go, I just want to get on this quick question about LABU. So that is a leveraged ETF, and obviously not designed to be held long term, designed for, you know, more trading. Do you approach those differently than you would, you know, say a regular, you know, stock, or is there any different approach you have to a leveraged ETF?
Well, I'm out faster. These things can really move. They're not for the faint of heart. You have to be able to pull the trigger to get out. You have to have your points where, you know, they break through a 10-day or a 21-day moving average line and you're out. Have to set your channel lines and know key reversals. So, yeah, they move quick. There's no two ways about it. But, you know, if versus... let's say one biotech stock that gets shot down by the FDA, it gaps down from, let's say, $60 to $15 overnight. You're not going to get involved in that shoot down with the FDA with these ETFs, whether it's a leveraged one or not. So you do have a little bit more protection in that regards. And, you know, there's some good volume, 2 million shares traded a day on this stock. You know, you can buy size and get in and get out fairly quickly. You know, if you have 20 or 30,000 shares or 100,000 shares or whatever, you know, you can scale out in a day. May cost you, you know, $1 or so, but you know, you're not going to get a big whack, you know, without a chance to get out. So, for me, it's one of my favorite ways to play.
We've been on the line with Dan Zanger. He's a momentum trader, swing trader, founder of ChartPattern.com. Dan, thanks a lot for joining us today. Love chatting with you as always, and we'll talk to you again soon.
Very good. Thank you. Bye-bye.
Thanks, Dan.
All right, always good to talk with Dan. Dennis, you hadn't heard that story before about the .com.
No, and it was great. You know what? Like, you know, I can remember, you know, I started trading retail in 1997. So, and I didn't go prop until 1999. But I can remember those markets that he's talking about, and I can remember, you know, I was trading with my parents' money back then. You know, they had the stockbroker, and you know, I was in school for finance. I was like, oh, I can do this market things, and you know, and really, you know, obviously most retail traders start from the long side. They're not really short traders when you count come in. And, I honestly thought like I'm, an awesome trader because, I'm buying these stocks and they're doubling in a week or two. And I'm buying this tech stock and it's going straight up. My parents thought I was good too. They kept giving me more money to manage because, and I was just a beneficiary of that market. I probably honestly didn't know what I was doing back then, in 1997, 1998. When I look at myself now, I was just randomly buying stocks when they were pulling back because I knew that they were going to go back up. And, and if a stock got 20% against me, it didn't matter because a week and a half later, it was going to be back. And, that was the tech bubble. Stocks, if you were buying, things, it made a lot of millionaires back then. And, the markets, were, great if you were buying stocks. And, obviously, the market's changed. And I think, I just had perfect timing because I started Bright trading in 1999. And I started to learn kind of how the markets work, and you learned it from, a kind of a market making, in 1999 when, Bright, it was a lot of floor traders there. So we were learning, about different things. Joel, I was with him, and Joel went through this, stock market crash in 1987, and you start getting, an understanding, euphoria on how it can break. And Joel, I remember you saying some stuff to me too. Remember, stocks can go down a lot quicker than they can go up. And, it's something, that I probably didn't know until I came to Bright Trading. And, I started focusing a little bit more on the short side. I probably started focusing on the short side about 6 months, maybe after I started, which is putting us right at the top of the tech bubble. And, so kind of just good timing because the bubble burst. And that 2001, I can remember, trading like stocks like Lucent Technologies. And I remember like selling, short and, just covering later on. And, the stocks, every time a stock would pop, it would just drop. So it was the exact opposite of the years of 1998, 1999, 2000 when stocks couldn't stop going up. In 2000, 2001, they couldn't stop going down. Every pop, you were just selling it short and you would make money. So it was the exact opposite. And obviously, it was, to ridiculous valuations. Like when Walmart's trading with a PE of 50 back then, and, Microsoft trading with a PE and Cisco trading with a PE of 80. I mean, that, was, the definition of craziness. So, it worked out well for me as well. Obviously, it worked out for a guy like Dan Zanger. Good timing for me more than anything. I wouldn't say I was skillful in 1998, 1999 when I'm buying these things. It was just, the market was, giving, I was just, beneficiary of the market environment that we were in.
And one thing that we had back then that is totally irrelevant now, what was the squawk from the floor? Remember in the S&Ps? And I can still remember that one day in March, I don't know if it was March 1st or March 2nd or whatever, and we were listening, and I don't know what turned the market or whatever, but I mean, you just heard it in the squawk, and you heard the the momentum change and the offers come in. I don't know if we got down limit that day, but man, it was just like I could just remember. I'm like, hit bids, and now with the electronic market, it's so much harder, to get that feel because
different.
Yeah, you could hear the turns. The market be going up, going up, going up. Then there'd be a pause, and then there'd be a roar. They'd hit all the bids, and that was one thing that they still, I guess, Ben Lichtenstein, I guess he still does some squawking from the floor of the S&Ps, but there's like 9 guys in there or something. It's all changed by
different.
Yeah, it's all changed from the electronic market.
And we used to live off Ben, and Ben Lichtenstein, if you ever listen to us, we give a lot of our listeners probably listen to Ben, it's maybe still listen to Ben, give him some props, man, because we made a lot of money listening to Ben, and listening to those turns in the pit, and he was great, like he would get the feel, and we were all trading, like S&P components. So, when the S&Ps turn and you could feel the turn going on in the pit, you just start loading up stocks like General Electric, stocks, like Citigroup, stocks and the ExxonMobil, the major components of the S&P there, because, when the market turned, they were going to turn too. And back in 2001, 2002, some of these turns were 10, 15, 20 points. You'd get some crazy turns in the market. So, if you got Ben there, and you can feel the pit, you can listen to the pit, it's in the background there, you can get those turns. That's where some huge money is made. And, you ride the next wave. And it was all waves back then. It would wave up, 4%, then wave down 4%. So you could really ride those. I mean, now the waves are like a nickel, on the SPY. It's so tough. There's not really any money in it. So, but back then it was huge waves we were trading all the time, and I know Jimmy A in there, he's saying trading pairs, and that's exactly, it was just inefficiency trading. I was doing the same thing. You get, one stock lagging a little bit there, and you're all over that, selling the leader, buying the laggard, whatever. But the pairs trading was working very well then too. Just classic statistical arbitrage or straight up arbitrage with the S&Ps against the components there. But when you can identify the turn in the S&P, you have a huge advantage there. And that was a great thing we had with that Trader's Audio with Ben Lichtenstein.
8:35 now. Time to take our second and final break of the day. We're going to go grab the CEO of Aspiration, Andre Cherney. He's got a very interesting background, so we'll be right back with Andre. All right, welcome back, traders and investors, to Ben Zinger's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Andre Cherney. He's the CEO of Aspiration, which is the name of his bank. So, Andre, what prompted you to start a bank?
Well, what really prompted me was what's happening with our current financial system, where a lot of people just don't trust the financial institutions that they're with. There's actually a survey that came out last year. 8% of Americans said they trusted their own financial institution. And when you don't have financial institutions that you feel you can trust, that you really want to be part of, that really leads to a lot of the challenges we see in our country when it comes to inequality of wealth, when it comes to a lack of asset building opportunities. And what we knew was that if you could build a different kind of financial institution, one built for everyday people, and really focused on creating a deep, durable, trusting relationship with customers, you could unlock a whole lot of good.
Tell us about the model, because you have a very interesting model. You call it "Pay What Is Fair," and I think that's incredibly interesting. Explain how that works.
Yeah, well, I'll start. What we offer at Aspiration currently is a whole range of different financial products. Our core product is our checking account, which is a 1% interest, no monthly fee, no ATM fee checking account. You can use any ATM in the world, never get another ATM fee again. And then we have a whole range of different investment products. Our core investment product is what we call the Aspiration Redwood Fund. And it's 100% fossil fuel free, 100% firearm free, looks proactively at companies with very strong environmental practices, employee practices, governance, and so on, that actually make that company more valuable. And over the past year, it's, according to Morningstar, in the top 1% of all large cap funds. It's actually, according to Bloomberg, the number one top performing sustainable large cap fund in America for the past year. And it has a $100 minimum opening deposit or investment. And so it really opens up a lot of access to great products for everyday people. And then our business model, what we ask for our customers in return, is what we call Pay What Is Fair. And as you said, it's pretty unique. What we say to customers is, you know what, you pick the fee that we get paid. Aspiration doesn't make a cent other than what you decide to pay us, and you get to decide what to pay us. If you want to pay us zero, you can pay us zero. And if you think we should be paid zero, then you should pay us zero, because we haven't done a good enough job of creating value for you and showing you that we're doing a good job. And that really just changes the entire incentives of the relationship. Really, for the first time in financial services for everyday people, it aligns our incentives and makes sure that we as a company have to do such an amazing, awesome job for that customer that they want to pay us even if they don't have to. And what we see is for our investment customers, over 85% choose to pay, even though all of them could be paying zero.
So then, yesterday we had a rate hike. Does that affect you at all in any way, or not really?
Well, I think it affects all of us in the financial industry, and we'll see what the Fed does going forward. Obviously, we've been in an incredibly low interest rate environment for a long time now. I think from our standpoint, though, we're really looking at long-term customer relationships and long-term financial products. Again, for a banking product, this is something that is incredibly sticky, and if we're doing a good job, these customers should be with us for 40 or 50 years. Our investment products as well are really designed for a long-term investing strategy, really being able to create something that's going to be a core asset for people who oftentimes are millennials, oftentimes are really entering the financial industry and financial markets for the first time. And we can provide that kind of asset that works for them as well as for more sophisticated investors as well.
Yeah, you brought up millennials. You guys are up for a Benzinga FinTech Award. You're nominated in the Investing in Millennials category. But I wanted to ask you, is this something that you've seen specifically in that demographic, or people wanting to invest in, for lack of a better word, clean and healthy investment products, investment vehicles, companies? Is this I guess, what's the demand that you're seeing for this healthy banking?
Yeah, it's an enormous demand. What we see is something that we see across the board in the financial industry. At Aspiration specifically, half of our customers are 32 years of age and younger. So really a younger demographic. And we've certainly seen just incredible customer growth for investment products that are built on social and environmental standards and an ability to give back, as well as banking products as well. Our banking product does not invest in the Dakota Pipeline, and basically is one of the few out there that isn't invested in the Dakota Pipeline. And so that really has driven a lot of our customer growth. And if you look at the surveys out there, 80-90% of millennials are saying that the social and environmental standards of companies is an incredibly important metric that they look at when they make investment decisions and when they make financial decisions overall.
I have to ask you about your resume. It's very interesting. You were the youngest White House speechwriter. You were the founder of a media startup. You were a financial fraud prosecutor. So what prompted you to want to go into banking?
I've had a eclectic journey, and I was the youngest White House speechwriter, but that was 20 years ago, so that ages me a little bit, or dates me a little bit. I've seen a lot of these issues from various vantage points. Obviously, worked on consumer financial issues when I was, from a public policy standpoint, both in the White House and later. Saw it very much from a ground level as a financial fraud prosecutor, dealing with home mortgage fraud and other challenges along those lines. But then really spent most of the past 10 years spending a lot of my business career as a strategic consultant. I ended up working, in fact, for some of the big banks and financial companies, consumer financial companies out there. And what I saw is you have these very, very large institutions with hundreds of millions of customers and trillions of market cap. whose customers just don't like them very much and who don't trust them. And that's not necessarily for any nefarious reasons. It's in some ways just the fact is that the business model for the big banks and other large consumer financial companies is broken, weighed down by a physical infrastructure, weighed down by a business model built on attracting fees or forcing people to pay fees, which really just drives a lot more of that consumer distrust. And as I sometimes think they're approaching their blockbuster moment. And you think back to what happened to Blockbuster, and there's really an opportunity for one company or a whole group of companies to come along and do things in a different and better way, and not only create very valuable businesses, but help consumers along the way who really need better financial services and products.
Andre, Joel here. I just going to throw a real random question here. You were the youngest White House speechwriter in American history for Clinton. Did you ever work with a guy named Myron Siegel?
Gosh, you're putting me on the spot. The name sounds really familiar.
Okay, yeah, there was just my brother-in-law's buddy. But all right, great.
What was he doing?
He worked. I thought he might have been working with the speech too, or some. I can't remember exactly what he was, but I thought it was something to do with his speeches. But since you're in there, I just thought I'd throw out there. That was a long time ago. But all right, thanks for coming on.
Yep, thanks a lot, Andre Cherney, CEO of Aspiration. You can check his bank out at aspiration.com. Andre, hope to see you at the Benzinga FinTech Awards in May.
Thank you very much. Bye-bye.
All right. Did Dennis make his triumphant return yet? I know
Dennis is here.
Oh, okay.
I don't know if you can call it triumphant, but I'm here.
Okay, let's move into some stocks. There is a lot of news this morning that we haven't gotten to yet. GoPro, or we didn't get to GoPro yet, did we? No.
Yeah, I'm kicking myself on this one too. Tell the story though. Tell what the news is.
Yeah, so the news is that they affirmed their Q1 sales guidance, but they're also cutting jobs. They're cutting, I think the number was 270 jobs, and they expect to be profitable. So, the stock got a bump up to over $8. Look at that.
I saw this headline break, and I'm sitting there looking at it after hours, and I was like, that's got to be. I see the job cuts, but you're always hesitant on GoPro because whenever it comes out with good news, usually the next headline is going to be bad news. So I'm like, okay, that's good news. They're cutting, but why are they cutting? Are they going to, disappoint on earnings? Are they going to lower guidance here again? What are they going to do? So I'm waiting for that next headline to come, and they reiterated guidance. So that was good news too. And then the stock really popped. So I'm kicking myself. I didn't buy it on the initial headline of the job cuts, because it was sitting there hanging out around 740, and you had a few seconds. Like I probably say, probably had 10 to 15 seconds to buy it on that headline, and the next headline was good, and then everybody jumps in, and then the thing blasted off, and you get Citigroup upgrading it today too, so analysts chasing price here as well. But kicking myself, I didn't buy it at 740 when I could have right after that headline. Stock trade up 10% here now.
All right, pre-market high 824, backed off to 806. I mean, this is a tough call here. I do see a couple highs above the $8 level, right between 806 and 834. That's right where the pre-market high is. I would say hold 8 off the open and just keep on going, right? If you're looking for the little continuation on the long side. If you open up at 805 right away, you're trading in 790s or whatever. I think, a lot of overhead supplying this one. We were at $9 just 2 weeks ago.
What about Fitbit? Because we know these two stocks, for whatever reason, seem to track each other. Maybe they're both one-trick ponies. Maybe they were the poster child of being loved and now completely hated here. Fitbit's trading up 1% in the pre-market. Do you think Fitbit gets a sympathy move here with GoPro? I do.
It is. It's trading up 7 cents here. Got a level to focus on, though. You have a 3-day high of 580, hit 576 yesterday. Just holding up right there. So once again, that opening print, follow through. You don't want to see it red on the session. Maybe a little room up to $6.
Okay, Starboard, let's go to them. They are out of their Macy's position here. Macy's trading down in the pre-market about 30 cents. We were talking about this $30 level. We bounced off it yesterday, got down to $29.89. We're here again, though. I can't pull the trigger here. Now that Starboard's out, too. Obviously, we were looking for a little bit of action there. Maybe, they get active there, and now that they're out, I don't know. maybe this Macy's isn't gonna. I thought maybe the 30 level might get a bounce here. We tried a little bit yesterday, but really with that strong of a market, now some more bad news. I don't know if we're gonna get a bounce here off the 30.
All right, you saw what happened yesterday. Held the 30 psychological level. Starboard, this is one of their very few bad calls here. The pre-market low was 29.
Do we know when they got in?
That is.
Do we know, like,
let me
Spencer,
look.
if you follow? Yeah, Spencer can look
Higher.
this up. That's the nice thing about the pro. You can look all this stuff up. We'll find out when Starboard got in. And just, did they make money?
No, there's no way because they're in like.
How long have they been in?
They
They've been in a long time?
Well, while Spencer's digging
I'm looking.
I'll give you
Okay,
a
Spencer's digging.
gap fill. You need to get down to 29.57 to fill the gap from February 1st when all the Hudson Bay rumors started. So 29.50, that'd be a level. Better place probably to cover a short than try long.
Spencer's still digging.
I got July 15th, 2015.
Okay.
All right. Let's go, look. So they were in July 15th, 2015. Yeah, that's not good news. That was when the stock was up to $65.
Did you even have to look, Dennis, to know that?
I didn't know how long they were in.
Yeah.
So I didn't know if this was like they were only in here for the last year because the stock did get down to 30 back in, May of, 2016. I didn't know they were in since 2015 though.
Yeah, I did
So
have that.
yeah, that's an ugly one. But I mean, this happens. You're as hedge funds, as investors, you're gonna have losses. You're gonna deal with losers. And like I was saying yesterday on the show, when you are a huge investor, you don't have the luxury of just easily getting in and out of your position. It takes some time to work those positions out. Ackman on the Valiant had to go in and get an offering from Jefferies to try to get out of his position. Like, it's not like you can just go in the open market and say, I'm going to hit the bid and get out. It's not that simple. So, risk management tactics have to be different. Your time frame has to be a lot longer. And, you have to be able to, build a position. You have to be able to take some heat, too, because you're not always going to be right. And sometimes those work out in the long run, and sometimes they don't. For this case, obviously, it did not work out for Starboard and Macy's.
One thing about Ackman, and we did make the low on the day that he announced he exited the stake, so that could be a historic level there at 10.50, currently trading at 11.10. I mean, if you ride the puppy down from 265 to 10, why not just hang on, for the other other $10? Why not?
Okay, so
go ahead.
Well, he said two reasons. His reason was that it was just taking up too much of his time. He'd already lost most of his money in this thing on this investment, and then they're focusing on it. They're on the board, or they have at least a couple people on the board. I mean, it was just too much time for him, and he needed to focus on other things. And I don't mind that, And he said he still believed in it, but then you surrender deep down. If you think a company's going to zero, why not sell it at 10?
Ooh.
So maybe he doesn't believe in the company. He says he still does, but maybe he doesn't. We
You
don't
think
know what
he shorted it?
No, it's going to be disclosed. No, I don't think he shorted it.
We'll find out in his next.
No, he never shorted. He's not going to flip his position there. So I'd say definitely not. And Ackman's on. What meat is on the bone here? Okay, you can say there's still 10 or 11 points, but there's some major risk too. I mean, short squeeze. They have all kinds of things. The time to short this was long ago. I think if you're shorting at Valiant now here at $11, hoping for a zero, these are the types of shorts that come back in your face because, all of a sudden it's that icon, started a position. This thing will go up 30% one day. The short interest, what is the short interest on it, Spencer, on Valiant?
Boom. We used to race the Brenster for that one.
Okay, well, I'll race with, whoever wants to race with me. I'm going right now, check the short interest here. And as of, I think yesterday, we're over 10%.
Okay.
So there's enough for a short squeeze in there too. I mean, but there's, here's a stock. It's fallen from 16.
8.4%.
Okay, so updated number 8.4. Okay, it's probably got so 8.4% now, but 16 down to 10 in the last week and a half. I mean, you're chasing it now. So it's hard to just come in here and say, okay, yeah, I think it's a zero. I'm going to short at 11. Because what if it goes to 16 or 17 before it goes to zero? You're going to be able to take that heat. So it's difficult to do. The short side is still a difficult trade in this market, even for the perennial losers like Valiant.
All right, Dr. J just asking about guests. We did cover that at the top of the show, and it was just making new pre-market lows. Let's see if we get a quick.
What was the level? Give us one number for guessing.
10. That's what we said when it was
$10.
at $10.
Number 10 and a quarter. It's 25 cents above that. So That's low as to hold to stay in the double digits. Couple other ones, Joel, that just in the news here, right at that close yesterday, VIRT to buy KCG. So you see KCG's obviously popped up here. It popped up yesterday, big time here. What was the price, Spencer? Do you have the actual price here that Virtu is paying for KCG? Share price?
$18 a share.
The cash or stock?
I don't know.
Go digging. Spencer's going to dig for us because I'm just curious if that's cash or stock there. So KCG got a pop. What was interesting is Virtu got a big pop right off the initial, headline there. And everybody's like, oh, no, wait.
I got it now.
Supposed to buy the acquirer. What, is it cash?
$18.50 to $20 per share in cash.
Oh, they haven't even given an actual price yet. It's just a range?
I think that's
18.5 to 20?
That's it.
So it hasn't officially been announced then? Because don't when they announce it, don't they give the official price?
It's a preliminary offer.
Preliminary offer, so it hasn't been accepted. So they're looking at 18.50 to 20. Big money to pay here, Virtu coming out here, and obviously, they want to get into the off-exchange market making. And this is, Virtu is a high-frequency trading firm. They trade, just for people, just sum it up here real quick, for people who don't understand the industry of high-frequency trading. They trade on the exchange for the most part. KCG is a huge off-exchange retail market-making division. So they're probably looking at that saying, hey, maybe, we want to get into this. There's some big money in there trading against retail order flow and making markets against retail order flow. And instead of trying to jump in, they just buy in a company that has a huge presence there already. So big money to pay, though. I think it was like $1.2 billion. So we'll have to find out in the long run if that works out for Virtu or not. But KCG getting a big pop here, at least yesterday, popping. Most of it was yesterday right at the close there because it was announced right before the close from 14 to 16.90 to 17.63. So KCG shareholders are happy.
Yeah, and this is interesting. I don't know if we got to discuss this last week, but Timberhill, which is the options market making arm of Interactive Brokers, Petterfly shut it down. They're no longer, longer. So here, options are obviously different, but interesting when one of the pioneers of the business and market making is pulling his operations, probably because just not profitable or as profitable compared to the risk. And here you have Virtu going in the opposite direction.
Well, but they're getting into the off exchange, so payment for order flow, some different stuff, which is beyond the scope of talking about on this show. But they're going in a little bit opposite direction there. They're trying to get advantage of getting direct access to retail order flow, which is often a little bit more. There's some great retail traders out there, but your average retail order is going to not be as knowledgeable as your average high frequency trader order. So when you're trading on the exchange, you're trading against a lot of other high frequency traders. When you're trading off the exchange, with retail flow, you're trading against a lot of people who maybe don't have the experience of other high frequency traders. So that's the attraction for Virtu to be getting off the exchange. Now, the options market making is completely different animal there, and Petterfy, I think, just doesn't want to jump into, the whole payment for order flow stuff. And, if he's not going to jump into that arena, it gets very, very difficult. So that's where, so they're out. They're out on the options market making. It's a difficult, bottom line, difficult game making markets nowadays.
Budweiser here in the chat from DC1. We'll just do some quick technicals on Budweiser. A nice move yesterday. What I would say is we did clear yesterday's high at 109. I'm not sure to see if any news associated with this, but
this is an ADR, so this is just trading actively in Europe right now. So you've got to consider, whenever you come in here and you trade an ADR, you see an active market. It's not necessarily news; it's just trading actively over in Europe already. So it's up another buck this morning.
If you're trading it here, though, just keep an eye on the recent high of the move. 110.09 your pre-market high, right up there. March 1st high at 110.18, and then the other brewer, we'll see Samuel Adams. Not a huge fan of that beer. Trading at 148.05 in the pre-market. Looking at the daily chart, that's up big. We must have some news on Sam, huh? Some good news at least. Let me check my trusty Benzinga Pro.
No,
here.
There's nothing. Sam hasn't even traded today. Zero trades.
Why do I see? Okay. No, well, maybe it's going to run with Budweiser.
Joel's dreaming up trades there
Let's
because
see
there
here.
hasn't even been a trade. What trade do you see?
Where'd it go off the board yesterday?
148.05.
My bad. I was looking at the 15-minute chart. Well, see if it could a lot of room up to the double top here at 153.
So it's pretty open there and very wide here on the pre-market. Imbalances here quickly. Just looking here, we only got about a minute left. Ones that jump out to me: Coca-Cola 50,000 to sell, Alibaba 119,000 to buy. Let's jump over to that one because this one's interesting. It's already trading up $1.46 here in the pre-market. Kind of been rounding a little bit too. Had a little bit of an ugly candle there yesterday, but now it's getting back up above that 105 area, and 105 has been resistive there. Every time it's gotten to the 105s, it's failed. We'll have to see if it can get back up above 105 again. Actually, you need to almost get above 106. Get above 106, and then maybe you're off to the races. So let's see what it does at 106.
Yeah, there's two highs there, 6 even, 6 1/4, and then last thing here, everyone's talking about gold here. Gold had a breakout, trading up $30 at 2.5%. I'll just look at the gold contract here. Had a sleepy 3 days. I wouldn't say major resistance up at that 1250 psych, but I see a couple highs just under 1240. Looks like 1238. But for this one, up $30 on the session. You do want to hold 1230, take out 1234, 1235, 1236, as opposed to peeling back. That's a big move in gold. All right. Right at 9 o'clock, Spencer, you want to wrap up today's show and preview the docket for Friday.
Couple guests on the docket for tomorrow. We have Phil Bach. He's the CEO of ACSI Funds. Phil will actually be in our office. So one of the only a handful of guests we've had to actually be on the show from Benzinga headquarters. Also, we're going to be joined by Kyle Dennis. He is a biotech trader and the co-founder of biotechbreakouts.com. Hope you enjoyed today's show and our chats with Dan Zanger and Andre Cherney. If you want to catch the whole thing again, you can do so on our podcast. That's on iTunes, SoundCloud, and Stitcher, or you can just listen to it again on YouTube right now. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Have a good rest of your Thursday. Good luck to those of you with teams in March Madness, and we'll be back with you folks tomorrow morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.